Donald Trump is battling the Fed to cut interest rates, but nobody is raising interest rates more than he is. The Federal Reserve is a bank of banks. Now, when you hear something like the Fed cut interest rates, that means they cut the federal funds rate. And the federal funds rate is the interest rate that banks charge one another when they lend each other money. So the Fed cut the federal funds rate. It is less expensive than for banks to fund their operations, and they are incentivized to lend to the public, which boosts the economy. So by raising and lowering the federal funds rate, the Fed is, by proxy, controlling the amount of credit that flows into the economy. What they are not doing, contrary to popular belief, is setting the interest rate on consumer debt. So your car payment, your mortgage payment, your credit card interest rate, those interest rates are all tied to the U.S. Treasury 10-year interest rate. That is the interest rate that the U.S. government borrows money at for 10 years. The Mac Daddy of interest rates, the most important interest rate in the world. Is it raining? It's still raining. This interest rate is not set by the Federal Reserve, but by the market and by supply and demand for US government debt around the world. Japan, UK, China, these are all big international holders of US debt. Also private investors like insurance companies, public funds like the Social Security Trust, and even the Federal Reserve itself all hold a lot of US government debt. Squirrels everywhere. So collectively, it's these players that are setting the 10-year interest rate, which most consumer debt is tied to. So how is the interest rate set? Well, it's a classic supply and demand situation. The US Treasury auctions off US government debt about once a month, and if there are a lot of buyers for the debt, then the Treasury can pay a lower interest rate. And if there are not a lot of buyers for the debt, then the Treasury has to increase the interest rate to attract more demand. Typically, the Fed funds rate and the 10-year yield move in the same direction, but that is not happening right now. The Fed has cut rates several times over the past 6 months, and the 10-year yield has actually gone up. Look at this chart. The square line is the Fed funds rate, and the more jagged line is the 10-year, and you can see the divergence. Why is that? It has everything to do with Donald Trump's policies. He has created a lot of uncertainty between tariffs and Greenland, and investors are demanding a higher premium for what they see as increased risk. Europe in particular is starting to be very vocal about its bond buying, saying that it could cut back purchases if the US continues its aggressive stance on Greenland. And Europe holds $8 trillion worth of US debt, so any pullback there would have a huge impact geopolitically and financially. And again, this is what really matters to everyday people. The 10-year rate is what is going to determine your mortgage payment and your credit card. That is the interest rate that will determine affordability. That is what matters to people. The bond market is very powerful. It is more powerful than any president or prime minister. Just ask Liz Truss. Trump the other day was asked what are the checks on his power, and he said his own mind and his own morality. But I actually think at the top of that list is the bond market. There's only so long you can pursue policies that the bond market doesn't like without being punished. If you like this video, subscribe for more. I've got your back.